Thank you very much indeed, Charles. So Charles has helpfully introduced SFE. I won't add to that too much, just to say that we are a private organisation. We're a member-based organisation. Most of our member companies are either financial services companies or other companies with a strong interest in the success of the industry, so law firms, technology firms and others. And it's very good to see so many people here today from our membership, but also I'm conscious that many are not in our member companies, so I thought I should briefly explain where we're coming from. What I'll do today is outline our assessment, that's SFE's assessment, of the knowable impacts and consequences of a yes vote. I'm going to talk only about the independence question which we're facing in the referendum in roughly a year's time. There is another debate, which we were touching on actually in our conversation before this, about whether or not there should be more powers for the Scottish Parliament, fewer powers in the views of some, but I'm treating that as a separate debate for today's purposes and talking only about independence. I won't refer to any specific companies by name because they're all different, affected differently, but I will try and set out some of the general principles that we've been following since we first took a very close interest in this topic, well, many years ago now, but particularly since about 2 years ago, where the UK Prime Minister David Cameron really forced the issue and said, okay, let's have this referendum. Like almost everybody else you hear in this debate, we are actually neutral on the specific question. We don't, as an organisation, on behalf of our members, have a view that a yes vote or a no vote would be the right vote. That really is an issue for voters and not for us. Nor am I going to question the viability of Scotland as an independent country if people chose to vote for it. I think it's absolutely self-evident that if Scotland became an independent country, it could do very well. But for our members and for us, that is not the question that we're facing. The question that we're facing is, if there is a yes vote, what changes will that necessarily bring for our industry, and what will be better? So we have no predisposition to any particular view on the question itself. We're cold-blooded, something our industry is often criticised for, but on this particular occasion I'm very happy to admit it, and we're dispassionate. We also have sought to proceed in all of our work on this, which I will summarise in a minute, on the basis of facts and evidence. This was a steer given to me very early by my colleagues on the board. We're empirical and we focus on what we can know now. A lot of the debate is cast in terms of things that might or might not happen once Scotland had voted for independence, and I quite understand why people on either side of the campaign want to have that kind of conversation. But we're focused on what we can know now. What are the facts we can ascertain right now ahead of the vote? And as I will explain, they're remarkably few. We don't actually look to those who support independence, most notably the SNP and the Scottish Government, but they're not alone in the coalition of interests who favour independence. We don't look to them to provide the answers, really, because most of the big questions that affect our industry will not be determined by them. They will be determined either in negotiations with London or in negotiations with Brussels. And I'll come on to explain why that's so important. The primary purpose of our work is really to inform our members, our member companies, so they can plan effectively and figure out what it might mean for their business interests. And we're open-minded, we talk to all sides of the debate as openly as we possibly can. I just wanted to say a couple of things about the nature of the debate as perceived from our perspective. It's really quite an unusual one for business organisations like us. Normally, you're engaging with government or regulators, but with government to talk about a particular policy proposal, maybe a tax change, maybe some proposal to, I don't know, reconfigure the transport system or something like that. And normally that's a debate. That's a question of, have you thought of this and what about this? That's not the nature of this debate. And I think, again, that's quite important to understand. In this debate, we have a proposal that Scotland should become an independent country. And that's really sort of it. That's not really up for grabs. Those who are making that proposal are quite clear that that is the right thing, and for them the debate then becomes one about how do we best make that work. On the other side of the debate, there are equally very strongly held views that it is the wrong thing, but either side, it either is or it isn't. It's not about degrees of change or individual policy choices. The referendum question is quite stark: should Scotland be an independent country? And that's deliberately put that way by the authorities who are organising it. Probably goes without saying to people in this room, but it's a very intense and very politicised debate. Again, that's relatively unusual for us, and our financial services industry is in any case not by nature keen to get involved in politics. So that's another aspect of the debate. There's lots of work in hand on both sides of the debate. The UK authorities are producing a very extensive series of very detailed and long papers on all aspects of the referendum question, all the way from financial services, currency, all the way through to culture and other things. So we've got lots to look forward to from that side. The Scottish Government has, and I'm sure Mr. Swinney will speak about this when he's here, has promised to produce what they're calling a white paper in November, which will, they're saying, set out exactly how an independent Scotland might work, because that's probably as far as they'll be able to go. And in addition, there's a lot of academic activity. The Economic Social and Research Council is spending millions on this, so there's lots and lots of material out there. The other thing that I want to, I suppose, emphasise is that the day of the referendum is very much a fork in the road moment as far as companies are concerned. There's no pre-negotiation ahead of the referendum. So what's clear is that if there is a yes vote, it is the beginning of a process during which we will come to know the consequences and the implications. We cannot know them beforehand. That is in the nature of the political process that has been constructed. It's always been obvious right from the outset that that's the nature of the process, and those who created the process knew that as well. It's always been clear that pre-negotiation is not possible. So the really sort of, I suppose the two main reasons for that are that the most important questions for our industry, which I will very shortly come on to, can only really be answered in negotiation with other authorities, predominantly the UK, but also other European member states, for example, on the terms of EU membership. So we can't know at this stage what those negotiations would lead to. We can only speculate. And as I say, we don't do a lot of speculation. It's also true that it's not given to us now to know who will be in government in an independent Scotland. We don't know who will form the first government of an independent Scotland, just as we can't at this stage know what the public finances will look like and many other things. So for one reason or another, it's a fork in the road moment rather than something that we can know the consequences of in advance. An important thing, though, for companies, I think, is that while we have many theoretical questions today, which we will doubtless talk about, and I'll go into some of them in a minute, the day after a yes vote, if there is a yes vote, they're no longer theoretical, they're real and live and urgent. They immediately matter. It genuinely is an immediate question then. What will the currency arrangements be in this new country that we've now voted to bring into being? Or not new, but whatever, I don't want to get into the detail of whether it's a new country or a re-emerging old one. But this new venture that we're going into, what currency will we use? We won't be able to know. What we will know on day one after a yes vote is that it's a live question that customers and everybody else are asking. So the key questions that we've been looking at in our work, there's really 5 of them, and I'll run through them all quite briefly. I've touched on one already, EU membership. What would be the terms of EU membership and what would be the timetable? Much of this is not possible to know now, but some things we can know. We can know that there will be negotiations over the terms of Scotland's membership. We don't know what the outcome of those negotiations will be, but we know that there will have to be negotiations. It's pretty clear from our own conversations with diplomats in other member states and others, and I'm generalising quite a lot, but I think fairly, the overall attitude from other member states, I would say, is along the lines of, yes, of course Scotland will be a member of the EU, you're already in, for goodness sake, so of course you'll be a member of the EU, but there won't be any special deals. The terms of membership are the same for everyone as far as we can make them, therefore don't expect that you'll get special arrangements. Some of what the Scottish Government's thinking is focused on implies that they would seek some special arrangements, and that would prolong the negotiating process. But we can't know at this stage how long that negotiation process would last. What we can know is that the ratification of the concluded treaty would take about 18 months, because that's what it takes. And we can also know that ultimately it will be member states, other member states, who decide on whether the terms are acceptable. And indeed, I suppose I'm assuming, as everybody in the debate cheerfully seems to do, that the people of Scotland would live with whatever was negotiated with the rest of the EU, whatever terms of membership were agreed. The second one on our list is a big issue, I suspect, for people in this room, and that's really to do with the current single market for UK financial services products. At the moment, you can run a business in financial services in Penzance, as in John O'Groats, and it really makes no difference. It's a very big issue for our industry because 90% of our customers are, in general terms, and I'm generalising, but 90% of the customer base is in the rest of the UK. And I think that's probably true for the insurance industry as well as for other sectors. So the current market, as it currently is constituted, in our view, has to change. Two main reasons for that. One is that one of the, I think, uncontested outcomes of a yes vote and the creation of an independent Scotland would be that it would have a separate tax system and a different tax system. Indeed, I anticipate that one of Mr. Swinney's arguments in favour of independence will be that precisely that we could have a separate and better, by implication, tax system. That means necessarily you have to create other financial products, different financial products from those you're providing for the market of England or for the rest of the UK. So for that reason, I don't think the current framework for the market can survive. Also, we, as I will come on to in a minute, we think you have to have separate financial regulation. They think that's required and pretty much an inescapable consequence of a vote for independence. There are some large providers who currently operate, for example, on a UK-Ireland business model, but they have, of course, to deal with Irish regulation as well as UK regulation, and they have to deal with the Irish tax system when creating products, just as the UK, as with the UK. And I think that's, broadly speaking, the sort of circumstances it would be sensible to anticipate. The third issue on our list is currency and how you organise your central bank. I think this is the most important question because it affects everybody. The Scottish Government have suggested that there could be a currency union and that the rest of the UK would agree to that currency union. The Chancellor of the Exchequer has said that that is unlikely, and that's a quote. And I think it's reasonable to say that the consensus of academic opinion currently is that a separate currency is the most likely outcome in the longer term or the short term, and that a currency union is probably not the most likely outcome. Now, the implications of creating and running a separate currency are obviously profound. Really profound. But, I have to respect the fact that the Scottish Government's view is that that's not going to be necessary because Scotland will be able to negotiate a currency union with the rest of the UK. Having said that, the working group created by the Scottish Government to look at these issues did also suggest that that could be a transitional process, transitioning towards a separate currency or indeed membership of the euro in some future date. Temporary currency arrangements generally don't work all that well, because certainty about currency is a very important thing. One of the consequences, clearly, of a new currency, a separate currency, would be the introduction of currency risk to transactions in which there currently is none, with all the costs that flow from that. There are also implications for some other areas of financial services. One of our members, Brody's, with the big law firm, they've done a piece of work which is published, it's on their website, which explains how it could lead to a dislocation of mortgage from property value, and you would therefore have a mortgage denominated in sterling with the possibility that your standard security in Scotland, the Scottish title deed, would be denominated in a new Scottish currency. So you can see the kind of questions that would raise, not only for companies but for customers as well. So I think currency is a very, very big part of this, and as I say, at the moment it's not given to us to know what the currency arrangements would be. Fourth on our list, and I'll try and rattle through these very quickly, is financial regulation. Very, very big thing for our industry, as all of you will know. It seems clear that under the EU treaties, as well as many other kinds of international obligations, a member state has to have its own regulator. So we would have to have a new regulator. It wouldn't be possible. It was mooted some months ago by the Scottish Government, but I think they've now agree that there would need to be separate regulatory structures for an independent Scotland. And there would indeed need to be a separate regulator for the insurance industry. I was looking at the Turkish accession documents, and there was a lot of stuff there about Turkey when it was negotiating, still is, I suppose, membership of the EU, the nature of the insurance regulator that they would be required to have. It needs to be independent from government and all these things. The EU rules are not prescriptive on how you need to shape your regulator. At the moment in the UK, we've got the Bank of England kind of doing everything with different bits. Italy has 3 regulators, one for securities, one for insurance, one for banking. There are different models, but you do need to have something. And even the most cursory look at the costs and staffing implications of that, if you just look around the EU, I saw my counterpart from Malta actually last week, and I was asking him about it. The Maltese regulator has 200 people. The Irish regulator has 600. If you look at any of the budgets, we can't know how much all that would cost. The two things I suppose we can know are that the cost would be counted in tens of millions, the staffing would be measured in hundreds, and it would have to be funded by the industry because that's the way the thing works. So for our industry, that's a significant additional cost because most of the companies, all companies still serving English customers, which, as I say, is most of them, nearly all of them, they would still need to be regulated in the market where their customers are. So it would add a new regulatory framework in addition to the ones we already have to deal with. Final one on our list, probably the hardest one actually to really learn any solid facts about, is the transition. If there is a yes vote, how long will it take to go through all this and resolve all these questions? Nobody can know that for certain. The Scottish Government has posited the suggestion that it could all be concluded quite quickly in time for a Scottish election in 2016. I think that's very optimistic. One thing I think we can, though, deduce from the facts of the process is that we would probably have to go through a period where we had voted for independence, if that's what happens, but we still don't know what currency change that will mean. So we will vote, there'll be a yes vote, and then I was imagining myself in Whitehall as the Treasury official who's given the letter from Scotland saying, right, let's negotiate a currency union. The first thing that individual would have to ask would be, well, what's the nature of this country we're entering into a currency union with? What's the constitution like? How is its balance of payments? These kind of quite fundamental things. They, of course, would not be known for some time after the yes vote, because they would have to be negotiated and all the rest of it. So we can probably foresee, in terms of planning businesses and other things, some period of time where we know that change is coming on the currency, but we can't yet know for sure what it's going to look like. So they're the main issues that we've been looking at. And in terms of ascertaining things we can actually know now, you will see that much remains unknown, and that, I'm afraid, is just part of the process. So just concluding, what is the impact of this uncertainty, and what can it be mitigated? Some uncertainty is just inherent to the process. We're having a referendum. You don't have a referendum if you already know the answer, because there wouldn't be any point. So there is inherently uncertainty about the outcome. I would suggest that most businesses need to have a contingency plan of some kind if their business is affected against the possibility of a yes vote, because, as I say, the day after the yes vote, customers, employees and everybody else will have real questions. They won't be theoretical ones, they'll be real questions, but people will be no nearer knowing the answers, and it would be some time after that. I think another question for our industry, perhaps on the insurance side as much as anywhere else, is does it raise conduct issues ahead of the referendum? Is it possible that if the polls narrow, for example, that people who take out a long-term savings product then find that actually the constitutional position has changed and may feel that they should have been advised of that beforehand? It's very deep water, and I'm not going to dive into it because I do understand the complexities of these conduct issues. We've had some initial conversations with the FCA, and so far I think they're just keeping a watching brief, but it may emerge as an issue. Another question is how much depends on the polls. At the moment, you can talk to some people, and particularly people who are not close to it, and they'll say, well, the polls are surely pointing against it, and maybe that is colouring some people's thinking at the moment. A lot depends, I think, on if and when those polls start to narrow. If it starts to look, actually, this could go either way, then I think people may feel that they need to, get more muscular, I suppose, in planning the business implications. Obvious point perhaps, but from our industry, we're very, very, very diverse. Different companies are affected differently. There are some companies who have 90% of their customers in England and they're a retail business, so you can see some of the implications for them. For others, we have asset managers operating in Scotland who don't have any UK clients. All of their clients are overseas. For them, the questions are more about the credibility of the new regulator if they stay in Scotland. The credibility of the new regulator, how long will that take to establish? If they're dealing with institutional investors who will need to know that this is their home regulator, a new Scottish regulator, what are they like? So there are operational implications for them, but I think they're of a slightly different kind. Finally, we have my email address is on the website. If there's anything about this that you would like to talk about in more detail, always very happy to do so. But our overall feeling at the moment is that there will remain many, many questions that it just is not going to be given to us to know the answers to before the date of the referendum. And I think more than anything, that's something that businesses of all kinds are going to have to give some thought to. Thank you very much.